Is this the end of the bull run? As the crypto market bleeds, wiping out nearly all of its gains for 2025 and plunging Bitcoin over 25%, most people are hitting the panic button. But while they sell, history shows these are the moments that create millionaires. So is this a dead cat bounce before a brutal bear market, or the final shakeout before the next explosive leg up? Welcome to Generational Wealth, your pathway from knowledge to legacy. In this video, we're cutting through the noise, analyzing what the smart money is doing, and decoding the on-chain data to find out what's next for Bitcoin and your favorite altcoins. Alright, let's not sugarcoat it, things look grim out there. Bitcoin has sliced through critical support, dipping below $90,000 and shedding over $25,000 from its recent all-time high of over $125,000. This brutal downturn triggered over $1 billion in leveraged liquidations, washing out traders across the board. As a result, the fear and greed index has plummeted to as low as 10, signaling widespread panic and extreme fear in the market. We're seeing altcoins posting double-digit losses, and the broader market is showing very few signs of immediate relief. So, with sentiment this low and charts this broken, it's no wonder people are asking if the party is finally over. So, what's the case for a longer bear market? The arguments are pretty strong, and we have to take them seriously. The first major warning sign is the technical breakdown. Bitcoin has fallen below the psychological $100,000 level. While this was a recent milestone, not a long-term support level, its failure has put bears in control for now. Second, and perhaps more importantly, is the issue of liquidity. After the October crash, liquidity remains thin, meaning there are fewer buyers and sellers on exchange order books. This makes the market fragile and susceptible to violent price swings. We are seeing a deliberate reduction in risk from major market makers, which is not a sign of confidence. And when we look at altcoins, the picture gets even darker for many. While not all are down 90%, many altcoins are still down significantly from their last cycle highs. The fresh capital required to fuel a true altcoin season simply hasn't materialized this year, with institutional interest remaining heavily focused on Bitcoin. This has created a massive liquidity bottleneck for some projects, leaving them starved for capital and struggling to gain any real momentum. But that bleak picture is only half the story. While fear is high, some data tells a very different tale. If we zoom out, corrections of 20 to 30% are not just normal in a bull market, they are healthy. Both the 2017 and 2021 cycles had brutal shakeouts just like this one, which often served as the fuel for the next explosive move higher. Some analysts even argue this looks like a capitulation candler pattern that often marks a market bottom, not a top. Furthermore, while some institutions are showing caution, others are buying this dip aggressively. We're seeing on-chain data and news reports that institutional players and even countries are accumulating at these prices. Viewing this as a discount, not a top, suggests the so-called smart money isn't running for the exits just yet. And here's where it gets interesting for altcoins. Bitcoin's dominance has been falling, which is unusual while Bitcoin's price is also dropping. This could be setting the stage for a powerful move into altcoins if and when the market finds its footing. We're already seeing interesting signals under the surface. For instance, some analysts are watching Cardano, noting that while its on-chain metrics have been weak, it's approaching what could be a key support area. Meanwhile, projects like Chainlink have seen huge surges in trading volume and on-chain activity at various points, signaling potential institutional interest. These aren't the signs of a market that's about to die. So where does that leave us? Based on the data, I believe the bull case is stronger. While we could absolutely see more short-term pain, the combination of historical cycle patterns, extreme fear being a contrarian indicator, and clear signs of institutional accumulation suggests this is a deep consolidation phase, not the start of a multi-year bear market. The most critical zone to watch right now is that $95,000 to $100,000 range for Bitcoin. If it can reclaim that level with conviction, it's a powerful bullish signal. However, if we break down below the recent lows and start testing support around $87,500 or lower, then the bear case becomes much more likely. Personally, I'm dollar cost averaging into my highest conviction positions here. I am buying this dip, but strategically and slowly. I'm also keeping a portion of my portfolio in cash, ready to deploy in case we get one final, dramatic leg down. This allows me to take advantage of the opportunity without taking on excessive risk. To wrap it up, the market is at a huge inflection point. The fear is real, but the data suggests this might be a textbook bull market correction that is shaking out weak hands before the next major move. Keep a close eye on the key support and resistance levels we discussed. If you got value from this breakdown, do me a favor and hit that like button and subscribe for more no-nonsense analysis. For trending topics and actionable crypto insights, join our Insiders Club on our website at generationalwealth.biz. For the rest of the year, we're offering new members access for only $3 per month. That's less than the cost of a cup of coffee for a month's worth of insiders knowledge. And now, I want to hear from you. Are you buying this dip, selling, or waiting on the sidelines? Let me know in the comments below. Stay safe and stay rational. Thank you for watching. We appreciate your support. See you on the next one. Quick disclaimer, I'm not a licensed financial advisor. This is for educational purposes only and not financial or investment advice. Crypto is volatile. Ever invest more than you can afford to lose. Do your own research.